because local time counts for our guests. Our guests this morning are Noah, Captain Rational. If you don't know who he is, where the hell have you been? And you, Benjamin, nice to have you again, sir.
I was just gonna say, when you are going to take up one of these new emerging positions, and do you kind of play those thought experiments out like so far ahead, and is that how you kind of calculate risk around it? Because I was thinking of doing like an article series. Obviously we like to write about projects that we really like and sing their praises, but I was thinking about doing a complete reverse of that and saying why our favorite protocols will fail, but I don't think it get as much traction.
Oh, I don't know. I think it might.
Are we allowed to do that?
I think it might. Everybody loves FUD. Everybody loves FUD.
But even the stuff that you like, just like really digging into like what is the thing that can break it. Do you know what I mean?
I think that would
test your own bias around it.
Yeah, I think that would be an awesome series, because there's a lot of things that, like, I think that part of what made Luna's collapse so devastating to people is they hadn't done that. They hadn't done the game theory. I mean, I remember you and I were having a discussion about how that could blow up like 2 weeks before it did. But like, it's just, I think that it would be good to have something like that in the space where some of these things require a lot of like game theoretic thinking and really playing through like what all the risks are. What are the types of like exposures they have? Like, do they have bridge exposure? Do they have like, if you could like sort of quantify, these are the risks of this particular protocol, I think that would be incredibly valuable for investors to be able to look through and go, all right, these are all the holes that different people have been able to poke in this particular format. And, like, these are the risks that you're exposed to. And then you can make an informed decision as an investor, like, if those are risks that you want to buy into or not. And or at least like use that as a risk management tool to make sure that you're not overexposed to, like, if all of your positions are exposed to a particular bridge that could break, that's a bad position to be in, because I'm not sure any of those are going to survive. Like they all, like it. And so like, I think that would be really good. I think that would be really good.
Yeah, the two.
We'll call it the How to Break It series.
And everything could fail. Everything and anything. There's no restrictions.
Yeah.
Even the biggest monetary policies.
Yeah, I mean, like, I definitely was thinking about that during the bull run. It didn't really save my portfolio, but I was definitely thinking about, how much do I want to keep on mainnet? How much do I want to have on each of these various things? How much exposure do I want to have to a potential bridge hack? Like, how much? Because I mean, if you're on another layer one, an alternate layer one, or something like that, like you are, and you're holding, even if you're holding USDC, you're sort of like exposed to a potential hack in which somebody finds a way to mint it on that layer, and you may not have the actual USDC that you can turn in for dollars. You might have the one that becomes worthless. And so these are things you need to think about when you're allocating to these various protocols. Like, are there, like, if you find yourself, for example, all in Danny coins, and then Sifu Gate happens, like, I mean, you may have taken that risk, knowing that you were doing something stupid, but that's the thing, you did it knowingly. And so I think it's a good idea to have like an idea of the types of risks and where you've kind of positioned yourself. You don't want to put all your eggs in one ecosystem or one basket, or maybe you do, and it's a concentrated bet, but like, at least you went into that, knowing
the risk profile.
Yeah.
Oh, yeah, risk is everything. I mean, isn't that what they say about traditional finance? They're not investing, they're managing risk. It's all risk management. Well, that goes into never go all in, never spread too thin, and the words of wisdom that we've had over the years. But as Buffett says, you're not getting anywhere unless you make a concentrated bet. So what's that play into? That plays into make concentrated bets. If you win 51% out of the time, you're heading in the right direction. So
Yeah,
yep.
so I mean we've obviously discussed some really important stuff in terms of the mechanics of not only the real world but the crypto world and how the crypto world translates into the real world. The question now for both of you, Noah to kick it off. I mean, it sounds like you've managed your portfolio in an adequate and in a risk prudent way. So well done for that. I mean, besides the commentary that you're obviously looking for and the wisdom that you're seeking at the moment out of the market, how are you positioning yourself for the next run? The run that could elevate you, sir, to the next level. What are you doing? What are you planning? How are you approaching it from that perspective?
All roads have led me to think that liquidity is everything. And that's why I stare at DeFi Llama's liquidity presentation. How many stablecoins are out there? So that'll tell me when capital is going to start to flow in and capital is going to start to chase opportunity and capital is going to start to flow to do whatever the hell it's going to do. This week, obviously, you guys know we're on the verge of a historic monetary policy transition. And, they use strange, complicated, convoluted phrases like the merge, which doesn't really describe what the hell is it doing. This is a disinflationary collapse of a currency. And that is going to be extraordinary, to say the least. What that doesn't mean anything with regard to the price point. I could care less. I don't have much of a net position. I hold Ethereum so I could pay for transaction fees. It's a currency. I need to buy it so I could buy things that are denominated in it. And the one thing that's always denominated in Ethereum is the transaction fees. So in that regard, it's 100% a currency. So that's a fascinating topic unto it. So in that regard, actually, if you think of Ethereum as a currency to purchase transaction fees, and that could be like oil, or because you have to have dollars to buy oil.
Of course it is. Of course it is.
Ethereum nodes are bonds because it is completely risk free if you don't think of dollar denomination. If you're only thinking of the cost of Ethereum for a transaction fee, your bond is giving you Ethereum. Dollar denominated, obviously, there's risk all over the place. So that's another story. So I have little to nothing to do for this week. I have patience and I have a productive portfolio. My portfolio produces capital on a weekly basis. It pays for everything everything, literally. And I'm sitting back waiting for liquidity to flow in, and then I look forward to transaction fees going just up only mode. And I mean, if Curve was cranking out, I don't even want to say the numbers. It was just, and that was on just VECRV, like cash per week. It was just so much volume. It's extraordinary. And I look forward to that again. And I think the next run, obviously, everything runs cyclically. It's just going to be more pronounced. But I love to look at the crypto space as an emerging market, its capacity to capture dollars. And we'll see that as we've been talking about liquidity. And it's captured significant amount of dollars. What do we have, 40, $50 billion? In December of 2019, Uniswap had $500,000 on it. So we've captured billions of dollars of capital. Let's say we're Brazil, not Brazil, Brazil. We're a country and we've captured dollars. What's the difference between a sovereign country and a digital country? All it is products and services, and clearly there's a distinction with regard to commodities and real world food and stuff, but there's still products, services, humans, operating enterprise. So the analogy is there, and this emerging market has captured capital. Capital has velocity. There's currency creation systems using traditional commercial bank double entry accounting practices via CDPs, currency creation systems. There's banking. Aave is a bank. If it walks like a bank, it talks like a bank, it is a bank. There's Forex markets. And there's never in history been a chance for the general public to own a piece of a Forex market. If I went to HSBC and said, here's $1 million and here's €1 million, go make me a market, give me 0.02% transaction fees, they will look at you like you broke out of a mental institution. But I go to Curve and say, here's $1 million and here's €1 million. Curve won't even respond either, but they'll say, here's two little buttons to click on, go have fun.
Yeah.
Anyway, that was my
I think
rant of how.
So I mean, the thing
like
is, what I find really like intoxicating is that you are a kid in the candy store, and the reason why you are the kid in the candy store, I am as well. Just for the record, I mean, when I hear you speak, it's like it really does resonate for me in terms of like, you know, I always speak about the gamification of everything, you know, and the game is underway, and the game is underway in all spheres, whether you going to the grocery store to buy groceries or whether you're transacting, there's a freaking game that's being played all the time. And it's so tangible in the crypto space because you can see it playing out. It's what you were saying earlier on, Ben, is that it's all there. You can see it. It's like this marvelous like kaleidoscope of things that are just happening, and you actually getting to participate in it. You are like slotting yourself in there and you're like, okay, I'm a part of this thing now. Whereas you don't really feel that when you're participating in the so-called real world in what is traditional finance. But you never answered the one part of the question, and that is that, are you looking towards kind of like the future 100,000, 10,000x play, or is that not really something that you're interested in at this point in your career as an investor and as a markets observer?
There's two things that I think about often. I don't take positions unless it's an appropriate position size, meaning if I can not get enough bang for the buck, I won't take a position. And that you're not going to get with, that's easier to get with relatively new protocols, but with a new protocol, you have increased risk profile. So it worked out very nicely with Aura. I took a relatively small position. I bought 10,000 Aura at like 80 cents. So that went up like a couple 100% and turned into a weekly productive asset, or bi-weekly productive asset of extraordinary proportions. That thing's paying like 50% a month relative to the initial position size. But that's how you measure it. And half of the complexity of managing the portfolio is perspective. So instead of measuring relative to its current price point, measure relative to the entry price point. And that's what's significant. And that means I shouldn't be buying at this current price point because it's not at a discount. And I'm biased because of that. I have to be biased relative to my original entry price. So because I can't get it at a discount, I can't take a position. So if something screams to me, I could get cash flow potentially at a discount, I'm going to try and get a relatively nice sized position. And I'm going to try and calculate how much cash flow it can produce. Nowadays, I try and stick to like what Warren talks about. And I want to buy cash flow at a discount the best I can.
Yeah.
What am I going to do? What am I going to play? The adversarial game where it's like, I'm tired of the adversarial game of capital gains, because if I buy something and I'm just waiting for 1,000 people to buy it after me so I could take their money, that's what it is. That's what capital gains is. I'm taking the money of people that bought something after me, and I'm tired of that. I'll let other people worry about trying to mentally rationalize, and that is exactly yeah, they'll do it. And you can't stop people from gambling, but I'm going to collect the rent and I'm going to take 0.02% of their transactions. I'll be like, all right, I feel bad about it, but if someone's going to take the rent, I'm going to take it.
So you find being kind of like the guy who's cleaning up as opposed to the guy who's doing the killing.
Yeah. I'm okay with that. I can rationalize that. You know, they're going to kill either way. They're going to do it either way. The gamblers are going to gamble, and you know, as long as you know they
As
Even
long
me,
as you collect the rake, you're good.
they paying rent. You pay, otherwise, get out, go to another candy
He's running
shop.
the table. He's running the table.
That's a wonderful business. Owning a table at a casino, that's crazy.
Yeah.
I mean, casinos are a great business. You can't stop people. I mean, what was it? The nanny state that says don't gamble. I mean, I'm a fan. I have my kids. I don't want them to gamble. I try and teach them how to be productive. And I went to school for engineering myself, and what it means to do something meaningful. But you're not going to stop people from gambling. So at least I could take some of their money. I mean, it's how I can't really say it any other way, but it's ultimately the sentiment that I have. Like, if you're going to
Well,
gamble and be degenerate, give me a piece of it.
well, I mean, to some extent, I feel like it's the level of gambling and speculation that's in this area is just because there's a wide recognition that the rails being built here are good for more than speculation.
Oh,
and
yeah.
and that eventually, if given the proper legal framework outside of the crypto space, you could be transacting all value on these rails. And so, I think some level of speculation is deserved.
You make an excellent point. Listen, United States, if you want to pay $1 billion in USDC to buy some stuff from China, I'm more than happy to let you send it in USDC, and then China, you could have it in USDT. I'm just going to take a little cut. Go for it. Go buy whatever you want, US. Go buy your goods from China, and I'll help you do the transaction for a little fee. Thank you very much. Thank you very much.
Mm-hmm. Yeah, I mean, it's slowly capturing, and what's interesting to think about too is that, like, money tends to want to, like, I kind of talked about this earlier. Money wants to be free. Like, it doesn't want to be regulated. That's why all the banks are in the Caymans and on Lombard Street in the UK. Like, that is why they've ended up in those places, is because they can operate in a far more free way than they can in other locations. And so those areas tend to grow, right? And so Ethereum has been able to grow quite rapidly because it has been complete capitalist free for all.
Yes.
And I do wonder if, like, there's a lot of talk about proof of stake and, like, the level of decentralization and regulatory capture from the likes of consensus and other things. Like, I'm not really commenting on any of that as far as, like, whether or not that's a real viable concern or not. But the thing to think about is, if that capture happens, is that capital going to leave to go to another more free platform? And if so, what is it? And,
Well,
like, do we all just start buying Zcash or what? Like,
no, we need the smart contracts. The innovation isn't Ethereum. Frankly, the monetary policy is a fascinating transition. But the innovation is the EVM, the Ethereum Virtual Machine, which has reached critical mass because it's spread to everywhere, including Cosmos chains, Polkadot. Obviously, it's the core
Yep.
of Avalanche, Phantom. The L2s exist. EVM is the innovation,
but if
and that means
if EVM gets captured, though, from a regulatory perspective, where does it run?
not too worried. But I appreciate the concern, and it's there in the back of my mind. But to me, I think even just mainnet, if any country could come along and buy a critical component to secure the network,
Yeah.
and that's the adversarial game theory to play out there. If one, and it all it takes is the first, and that's where we see that cascading effect. Once the first tries to take control, someone else will say, "Oh, look what they just did. Oh, if we don't step in now, someone else is going to step in," and it just creates the feedback loop that draws people into the fight to participate in a federation. Who's going to be the first nation state to carve out a piece of Ethereum critical security?
Yeah, I mean, well, that, and I mean, yeah, I mean, you've got that, and then the validators are also, you know, approving transactions and ordering transactions, and what do they do with that power? That's another interesting question once you've gone down that rabbit hole.
I mean, come on, any of these countries, they print their own currency subjectively. It's not like they're dealing with deterministic monetary policy. I mean, the ECB is just going to print the €1 trillion and buy all outstanding Ethereum and buy critical control over LDO and Rocket Pool or RPL. And, come on, they have a printer. What the hell are they doing? So it's a scenario that is interesting. Why would they not? I mean, Russia.
You get
wants,
countries sandwich attacking each other.
well, that's where Manifold and Rook come in, and
Yep.
there's plenty of. I mean, it's just the beginning.
I wish I would have
but
bought the dip on that one.
Yeah, Manifold is hot. But bear in mind, it has very little liquidity, so that's a perfect example, in my opinion, of great tech that's just not a good investment. I don't. It needs to have some sort of critical liquidity. Less than 1% liquidity, just was a turnoff for myself. Even if I could get a discount on a purchase, like 50%.
I hear they're going through a raise to increase liquidity,
which should be
between
good.
us.
And but then there's the speculative potentiality for a position, but it's very complicated to take on risk. And I end up avoiding risk often because of it. Anyway.
Yeah.
That's one of the more recent things I've considered is Manifold. It's such a significant component along with Rook, but the liquidity is just, I mean, literally, what's going on right now? If there's less than 1% bidding it up to like 86, down to 65 to 80 something, let's say, it's by definition retail scrambling over scraps. How else can you argue what it is? They're scrambling over scraps. So come on, there's a whale out there with 20,000 sitting around, and you can see that right on Etherscan. So yeah, 5, 10, no. So you can't buy a meaningful part of that.
What do you believe? What do you believe the catalysts will be for liquidity to re-enter the system? And it doesn't necessarily mean that we're entering into a bull market, even though it could very well be the catalyst to trigger a potential bull market. But what do you think the catalysts are that will bring about this influx of liquidity? And I'm sure
it's all about stable coins. It's all about capital expansion systems. If I mean, $1 billion seems like a lot, but let's say a country has an extra $1 billion and they're like, what the hell am I going to do with this $1 billion? It's just sitting here. It's doing nothing. All right. I could buy $1 billion worth of Ethereum and borrow it and borrow capital, borrow a synthetic dollar against it. And I could sell those synthetic dollars for $4. And I literally just equity access that I didn't have to go through a bank, and I have custody over all of it. And so it's just, that is really what I think drives the capital in, is the freeness of it, it's the permissionless of it, and it's the avoiding of traditional financial infrastructure of it, and it's the global nature of it. You can borrow dollars in any country on the planet really permissionlessly without identity. That is so attractive to capital. You don't even have to force capital in. It's going to draw capital in by itself.
Yep.
So why have you not given up your day job and gone to advise for governments at this level? Because I mean, it seems like a no-brainer to me.
Have a nice presentation on the 27th, 28th, 29th.
Why
of this
am I not
month.
surprised? Why am I not surprised? I rest my case. I didn't even know this, by the way.
Well, nobody does really, and it's not really Ethereum related. It's Digibyte related. Go figure. I have a lot of my roots started with UTXO technology, but I always have a high opinion of their UTXO implementation, and it's in brevity. It's not a good financial investment, and that's something I've said very clearly over the years. But from a technology standpoint, it's the only UTXO chain that a government can provide meaningful security for, that they could kind of adopt and say, here, we're going to provide X amount of hash, general public, go have at it, and it could be like a public-private partnership. So it's a great opportunity for a sovereign nation to adopt an already existing public UTXO blockchain. And all they have to do is provide security and set up the incentive system, maybe do some monetary policy such that the token price is actually decent and stable. And all what is monetary policy? It's just the government stepping in as a market maker. So that's something interesting that's coming about towards the end of the year. End of the year, end of the month. I always keep your day job. I like the company I work for. It's a fintech company dealing with gamification of what's payments. It should be done in crypto, and eventually it will be if everything heads in the right direction. It's monetization of content, monetization of eyes and click through to generate capital. Will eventually end up with debit cards. Click on ads, get paid, spend money.
Does it surprise you that a man that's worried about cash flow keeps the day job? It shouldn't. That's non-correlated cash flow right there. That's perfect.
And measure your success in the crypto space relative to multiples of your day job. And if you get at least 1x, you're heading in the right direction. And every multiple from there is just how you measure your degree of success.
Mm-hmm.
Some of us have day jobs that are related to crypto. Go figure.
That is a correlated correlated investment.
Yeah. It's been an interesting one, and it's been fun. And we get to speak to, awesome individuals like yourselves. And, this is our job, and this is what we do. It's fantastic. So thanks
it's
for
stunning.
that.
Yeah, it's a pleasure to participate always.
We appreciate you. We appreciate you, just so that you know. So, I mean, liquidity coming back into the system, you talking about big players. I mean, this is a big play, I mean, obviously, that's the ideal scenario. Do you believe that ideal scenario is going to become a reality? Or are you forcing yourself to believe that? You think so, Ben?
Capital flows in cycles. Capital flows in cycles. Capital will flow back in because there is opportunity. The only reason capital has flown out is because of an exogenous event. There's nothing endogenous to the crypto space that is pushing capital out. It's not like the risk in the crypto space is extraordinary, like some sort of systemic event happened that's pushing the capital out. It's the exogenous risk that is drawing the capital out. So people need the liquidity to service their debt obligations. But when there's excess liquidity out there, capital flows back in. And really the model there is the emerging market capital flows. The way India capital flows there, Brazil, and it has to do with capital flows there when there's excess liquidity in the U.S. and some investment bank says, I have an extra $1 billion. What the hell am I going to do with it? All right, I'm going to invest it in some Brazilian mining operation. And bam, that's how capital flows there. It's the same thing with the crypto space.
I mean, I already kind of talked about this part of it, but like the tools the Fed has basically push money into places like crypto. And so when everything breaks and they end up changing course again, it's going to just push things back to this space. And if history tells us anything, it's that it'll only come back bigger. And so you can rest assured that the Eurodollar system, as well as crypto systems, will not get smaller after they're backstopped. So
They've raised rates. What?
Sorry, no, go ahead.
So why did capital start flowing back in the crypto with the ECB raising rates a couple of percent? That takes the buy pressure off the dollar, or 75 basis points. But because the ECB is a large component of the DXY, so that's why the DXY had a little bit of a top. But obviously, if they have more energy complexity, there goes the buy pressure back on the dollar again. No matter how tight it gets over there, it's relative. If the euro tightened a little bit, that loosened the dollar. It's just the inverse proportionality there. That's something that at least I could conceptualize over the last week or so.
I mean, in the same way that we compare APRs and things in crypto, if you evaluate them as sovereign nations, as Noah has, like that stuff happens on a global scale where you have countries going, hey, I can get 5% over in China and only 2% in the US. I mean, that's where we were like a few years ago, but now the tables have sort of turned there. And so everybody's running to the dollar because we have the higher rates. And so we're sucking liquidity into the dollar system by way of that delta in our rates of return.
They want to dry up the liquidity because they want to cure consumer price inflation, demand destruction. But the issue is obviously supply issues. But how much can they try and destroy demand? They're going to try and destroy demand to the point where the dollar crushes every single foreign fiat. This is obviously a game of weaponization. In good part, they could say it's because of what Russia has done in Ukraine. But ultimately, they're going to have to cater to what the reserve currency is supposed to do. It's supposed to stabilize forex markets. If you want to be the reserve currency, you got to ensure stable forex markets. Otherwise, what are you doing? They're just abdicating their responsibility. And
there's an interesting game theory to all of this, because I did a post on this on Twitter a few weeks ago, but at what point does the dollar strength become a concern for global stability? At what point does the dollar get so strong that we are breaking our allies' economies and the stability of their governments? And at that point, do we reverse course? Or if the U.S. economy is good enough, do we just go, I think we're too interconnected for us to truly just be completely uncorrelated to what's going on around the world. I think eventually it'll get bad here too, and then they'll have the political cover to actually, make those moves of easing and stuff. But it's an interesting thing to think about, because you don't want it. It's almost, I don't know, how many countries do you want to break in this round of the milkshake?
horrible. And they don't care, because look, they didn't even. The U.S. hasn't blinked an eye with regard to what they've done in Africa so far. What was it? Sierra Leone has already devalued their currency. Was it Ethiopia? Which currencies have gone bankrupt so far?
Oh, Sri Lanka.
Sri Lanka is horrible.
Yeah,
look, they don't bat an eye.
A lot of them. No,
Argentina is also not looking great.
Yeah, Argentina.
The plan.
But
no, they'll argue that you could always say they took on too much debt, and that's what, if you take on too much debt, you're going to go bankrupt. But you're talking about people, you're talking about humanitarian crises, you're talking about hegemon and responsibility to manage forex market stability, which is the responsibility of a reserve currency. So it's an absolute disaster. And when will it stop? It'll stop when it hurts at home. And unfortunately, that's after all that pain overseas in foreign fiat, and that's when unemployment starts cranking 3, 4, 5%. Then it'll stop at home. But here's the problem: they're acting, they behave at the central bank like it's a U.S. currency, And that, to me, that's what's so insulting. It's not a US currency. It's a global currency. That was the whole point of getting the whole planet to denominate every damn thing in dollars. It's not a US currency. But they
Yeah.
treat it like it is.
Yep. And the reason that came about was simply, again, because of liquidity. We had more liquidity because after World War, actually, I mean, go back all the way to World War One. After World War One, we had like 3/4 of the world's gold. Like, and that, that never really balanced itself out. Like, we never really fixed that. And so what happened is you had all this concentrated liquidity in one particular place, and it just allowed the US to just accumulate more and more and more power, because liquidity sort of begets more liquidity.
Yeah, I agree with that. That's a great statement.
Yep.
Opportunity draws in more opportunity, and that just attracts more capital. So that's very consistent with the statement. Directionality persists until capitulation. Capital will continue to flow in a particular direction until some sort of criticality is reached, and then it reverses.
Is there a basis for discussion / argument for the Fed to print more money?
Well, yeah, there's a dollar shortage of extreme proportions, and for the Fed to print money would be that for them to unfuck forex markets. But it is not print, and also security shortage, as in treasuries.
USTs are money. They are,
Yes.
like, printing treasuries is printing money.
Yep.
And the way I see it is the Fed is really just a reserve tank to soak up excess treasuries and release them as needed. And they don't actually print the money, but they can sort of print reserves and then buy USTs with them to fill up their reserve tank. And then, they can distribute them or collect them, and they can buy other assets.
But the most important question is, if they print more, does that mean number go up?
Well, we've seen a correlation between the Fed balance sheet and risk markets.
Yeah, it's definitely a factor. I mean, the problem is that
it's just not sustainable, right?
Well, I mean, like I said, like, the Fed balance sheet is a reflection of the amount of intervention we've had to take in overseas dollar markets and saving parts of the system that don't fall under our regulatory control. So, like, if all the money markets of the world start failing because of some issue in the Eurodollar system, you can be damn certain that they're going to step in and fix that, regardless of whether money market funds fall under their purview or not. Because whereas all their constituents, like retirement accounts, depend on those money market funds being worth $1 for $1. Like, if you lose that peg, you have just mass societal eruption. And the Fed is a political organization, whether they want to admit it or not.
Yeah, too big to fail, written across the entire spectrum.
I mean, it's what I find really fascinating about, obviously, the discussions that we've had over the last few months is that, we kind of thought, well, I did anyways, and I think a lot of people share the sentiment, is that we were under this illusion that, like, crypto was going to be like this separate, isolated entity that was potentially going to solve a whole lot of these problems that we have in this world. And now we've had close to 2 hours discussion on how, it all is very much, embellished and convoluted, and it's all interwoven into one another. And obviously it is. It's kind of like the most obvious thing. It's like, well, if you're talking about money, and that's obviously a separate discussion, what is money and how does it work? But we've pretty much established that money is, this transfer of ideas, energy, doesn't matter how you perceive it, but it's an agreement that you and I reach, and we go with it. And crypto is no different, except that crypto is just more transparent, but the rules still apply.
And it's kind of like, it's a bit of a bummer, because I think a lot of us were hoping that maybe we could bypass a few of these rules so that we didn't have to deal with, monetary policy and, all this stuff. But at the end of the day, it's very relevant, and it's even become more relevant now because it's been accepted as, a part of transacting and as money. Like you said, Ethereum is money. You described it very eloquently and very beautifully. The fact that I'm using it as a form of payment for gas, it's money. End of story. The argument is open and closed. No more further. And now we're sitting at this crossroads where we are participating in world monetary policy. Yes, we're small. Yes, we are fairly insignificant, but we are getting to really see a reflection of that, obviously on a much smaller scale. And I find it fascinating. I find it very exciting, but I also find it very daunting, because I hear a lot of bad news in the discussion that you guys have presented today. I mean, it's like there's a lot of bad news there. I understand why. I mean, I'm starting to see, how relevant all of this stuff is in light of the complexity of the economic problems that we have. And it makes me a bit sad, but then it's also pretty cool that we get to see the transparency of it play out in front of us, as opposed to never being clueless, like the whole way.
On the bright side, bottoms don't happen when there's good news to talk about. So, like, that final capitulation event happens when everybody is like, this whole market has been destroyed forever. Like, think about the oil market in 2020 when it went negative on the ETF. And like, that event is why we are here right now talking about an oil shortage. It's because so many not distillers. What's the word I'm looking for?
Those are good too.
Yeah, those are good too. But like,
refineries.
You might need some distillers, but after all this, yes, refineries. That's the word I'm looking for. Yes. So like all the oil, anyone in that industry, like there was so much capitulation that happened at that point, because it had been a bear market for a long, long time in that industry, just because of cheap oil prices and cheap energy prices. And eventually that was the final capitulation, where everybody just goes, you know what, I'm shutting this thing down. I don't know when this COVID thing's going to end. I have no idea if anything's coming back. And that capitulation, that led to where we are now with like, $80 to $100 barrels of oil, So like, it's always in that when there's blood in the streets, that is where the turn happens.
I'm not too worried about like a final capitulation. I just think the opportunity is paramount. It's the permissionless nature of it, and I find the regulation attempts to be humorous in many regards. It's like a company. This is like the extent of what the reality is a company opens up in the US and they be told to go to the SEC for registration, and like, all right, fuck it, I'm just going to go over to England and do the same thing in the US because it's hosted on IPFS or whatever. And the United States people still have full access to it, just as if I was operating in the US, except I'm not in the US and I'm doing it overseas. So it's a global layer of interaction that the crypto space represents and facilitates. So I find the nation states trying to execute regulation quite humorous. They don't know what they're doing. They're not having the conversations that matter, or they're not having the conversations with the right people that have a capacity to conceptualize what is actually going on.
I think there's also just an incentive thing. They're not incentivized. They benefit. The people that are in power benefit from the current system. They are products of that system. They benefit from the construction and the structure of that current system. And so they have no incentive to understand this new system, because they just want it to go away, and so that things can go back to the way they were before. And I think that's part of the problem. Like, if they really wanted to, they could just make a CBDC that was exactly like cash, that was just as anonymous and just as like, unregulated as cash. And it would, all these like sort of concerns about, oh my gosh, these stable coins, they could destabilize the entire world. Yeah, well, you could fucking fix that. You could fix that by making it so that the Fed can print reserves and they're just as good as money, but they're in a CBDC form and it's completely anonymous and completely like, private, just like cash is. You could fix that with something just like that. But they don't want that. They want to make something that's less useful, that's more like surveilled and just more terrible so that they can exert power on you. But like I think it's sort of like the music industry that was struggling with all the downloads in like the early 2000s. Everybody's like, well, hey, why are all these kids downloading all this stuff? And it's because downloading music was way more convenient than buying CDs and physical media. And the thing is, like, you had underserved customers. All they wanted to do was be able to stream music digitally and to be able to have digital music easily accessible to them. And if you did that in a way that actually made sense, then people would use it. But the problem is the governments don't want to give you the product that you want, which is just cash digitally. They want to give you a different product that sucks. And so you use stable coins instead.
E-shares.
Here. Nice.
Right.
Yeah, we could end on one sobering reality that if the Fed wanted to, they could shut down the global system and pull the plug by jacking rates through the roof, turning off the liquidity taps, and then the only thing that remains are U.S. dollars and U.S. sovereign debt obligations in the form of T-bills and bonds. And in exchange, there would be no other operating foreign country. There would be no other market other than U.S. dollar markets. Every other foreign fiat would be gone. But this is the world that we live in, and this is the acceptance and processing of the risk calculation. If they subjectively decided to do that, to eradicate foreign fiat, they could. So how do we process that from an emotional standpoint? How do you proceed? How do you create a portfolio that exposes to any risk if that's literally the extent of the risk on the table? So those are the mental exercises that I burden myself with quite often, and there's a way to construct a portfolio, and that's just a cash position. And that accommodates it significantly. And do they really want to crush every single other currency out there? Who the hell is going to produce various exports? It doesn't make any sense. So at some point, there will be a bottom, there will be a cycle, an emerging market cycle, and liquidity will flow in the other direction, and everything will be happy, happy, joy, joy, until everything gets all fucked up again.
Yeah.
We will get an opportunity to do a repeat of this, and then hopefully when we do the repeat, let's hope it doesn't take too long, because the next one we have might be as sort of depressing as this one, but let's hope the next one is a lot more positive and we're somewhat euphoric and we can all compare our bags and smile and wave.
This is my euphoric. I'm excited. This is lovely. We're prepared. Let's just remember, guys. Just remember, the worst it could get is like mid 2019, and everything is boring. The markets are dead. If you were not in the market at the end of 2019, you were not exposed to the most explosive market conditions in the last half a decade. If you weren't in the market and then you hit the market in Uniswap and everything that happened by May of 2020 was such an eruption of DeFi summer. But you had to be in the market to even get a sense of what the heck was going on, to even begin to potentially try and construct a portfolio to be exposed to the right things versus the wrong things.
Well, we do have that privilege, right? Because we participating, we commentating, we try and invest. We get it wrong most of the time in this market. Like you said, you should not be trying in this market because you're fighting for scraps. But we're lucky.
Well
We're
said.
very lucky from that perspective. I'm grateful. I'm grateful that I am in the space, and once again that I'm doing what I'm doing at the moment. It's good fun.
This is the time to be in the market. And I say that obviously with my penchant to carry a message to everyone, not just yourselves, but everyone that listens. This is the market to be in. I've seen equities. I've seen my REITs and whatever the hell I do over in equities land. It is boring. It is cobwebs. It is slow. It is clearing times and ACH 3-day confirmations, and this is the most exciting market and the place where my capital belongs.
Yeah. Well, and I think part of the reason the TradFi markets have become that way is because the system around rent extraction on every step of the way has become so entrenched that, like, if you invest your money over there, all the returns just go to other people that aren't you.
Yeah.
And so, like, there you got people taking chunks away. Like, your whole 401k is basically just like a tool for money managers to make money, and like they take all your choices away. It's just a bad system to return value to you, the investor. So we don't have those levels of ossification yet, and in crypto, and so you can actually make the money here.
It'll reboot.
It will.
Cool, Jen.
It'll happen. But in the meantime, let's make some money.
which is what we plan on doing, and that's why Blockmates exists. Gentlemen, thank you very much for your time. You guys been awesome. It's been awesome to have you on. We've had good fun, a lot of great info. Really appreciate it. And to everyone who's listening, please like and subscribe. It means a lot to us, and it allows us to carry on doing what we're doing. And that's to give you guys proper cutting edge information for free. So bring it on. Thanks,
It's been a
Jess.
pleasure.
Thanks a lot, gents.
It's been great.
Cheers.